chatty conversation, hopefully.
Stuart, is that a beer?
Yep.
Okay.
Yep.
It's 4 o'clock. That's fine. I'm just jealous. That's all.
What day is it today, Michaela? I don't know. It could be Friday.
I don't know. What month is it? I don't even know.
That's right. Doesn't have to be so surreptitious, though. It's fine, you know.
That's right.
Gotta do it like Sarah,
I
have
guess
the
we're talking
tea bag
about,
in there.
I think we'll talk about pitching for business, right, for the chat today. I have a couple of slides with me. I'll put them up, but I think a chat about the concept and the focus of kind of how you pitch for business is probably the easiest way. Do people have experience with kind of pitching for business or like investments, investor packs, anybody raise money, kind of that kind of thing a little bit on the call?
I've had a massively unsuccessful crack at it, Niels, in the early days. But...
Those are the best ones. Yeah. Unless, accepting some of those very bad experiences that I won't mention on this call because it's being recorded, but we'll talk about those today. All right, so let me put the slides up and let's have a look at this. Can you guys see all this?
Not yet.
Nearly.
Coming
up. If I can slideshow this thing. The thing I don't like about doing this on Teams is I haven't figured out how to get all of you on the side, so I can actually.
Yeah, I know.
Also have
There's context.
The top. Oh, that's right, because it drops you down to the corner. You have to click on it, and then I usually drag that to a separate screen.
Oh, really?
Yeah. It miniaturizes things, which is annoying. So what I might do is I might go share the screen and go back out of the share, and then share the screen and go back out. It's a bit back and forth, but I'd rather have a conversation with you guys about the concepts as opposed to looking at a bunch of slides and only one person at a time. Does that make sense? Is that helpful?
Yeah.
We still can't see your screen though, Niels.
Oh, you can't? Hang on. Let me try that again. Thanks for letting me know. I'm just going out of the presentation. Check the screen again. How's this?
Yep.
Is that better? And make you've seen some of these slides, the first couple of slides when we were having the chat earlier last week as well. But really the presenting bit, the best thing to focus on when you do pitch training is less, how do you present well, and more what it is that you're presenting and what is your audience really trying to get out of what it is you're presenting, because the audience wants to get something from you, right? They want to assess whether they can, put money in your business or buy from you or whatever you focus on in the presentation that you're holding. The interesting part is obviously you guys have seen some of the kind of startup community. You've been in this sometimes for years. You've seen that, presenting your stuff is really part of the startup world. And it's because it's one of the main vehicles when you're early stage and you're trying to raise people's attention of what it is you're doing. Telling your story is one of the best ways to get that across, right? You can't pay for massive marketing campaigns and all that stuff. Presenting what you do is kind of becomes a really important thing, and it's not natural to a whole bunch of people, especially more on the technical side of technology. So how do you do this in a way that's authentic and where you can get your story across and get people to do what it is you basically want them to do? It's an influencing job. So this is the typical framework. So you see this in everywhere from Stanford, Y Combinator, early stage startups. They all frame it in the following 4 chevrons, right? They go from problem to solution to insight to the evaluation that then the audience does at the back end. You've probably all seen this, where you go, okay, what is the problem you're solving? What's the solution you're presenting, and how you're fixing that particular problem? And what is the kind of insight that you're delivering that shows that, of all the people, all the billions of people that live in the world and all the millions that work at this, why you and why your company and why your solution, what makes you special to solve that problem that so many people have, right? So I'll go through the 4 boxes and I'll go out of the slideshow and just see what the kind of experiences that you guys have had and if there's any questions. So on the problem, you always want to go and focus on a problem that's called a good problem. So a good problem is classified as a problem that lots of people have, a problem that's growing, a problem that's urgent, that people need to solve right away, a problem that's potentially expensive to fix, a problem that might be mandatory to address because laws change, etc., and a problem that frequently comes up. So not only do a lot of people have this problem, the people that do have this problem, encounter this problem frequently in their days and their weeks. So then you go to the solution. So typically you want to put a solution to a problem and you use whatever tech that you can. Sometimes it's inverted. It's called a solution looking for a problem. It's typically not the right thing to do, but it can happen. Then how do you describe your solution to outsiders? So one way that I've seen that works really well in presentations is you frame the problem as a hypothesis. So you basically say, what is the hypothesis and the problem statement really for your business? And then you go, what's the experiment that you're running? I'll give some examples later, but basically you're saying, look, we think that this is a problem that a lot of people have, and our experiment is that by using this particular app or this particular solution, we can solve that problem in a really efficient way that doesn't cost people a lot to do. Then you go into insight, which is about unfair advantages. So do you have special people? Is your market special? Is your delivery of your product special? Is your method of acquisition special? Or do you have somehow a kind of monopoly in the way that you deliver the solution? There's no one else really capable of doing this in the way that you do. What you see here a lot when people present is they basically go through all of those paint by numbers and they say they have an unfair advantage in all 5. And that's incredibly unlikely. It's more likely you will have 1, maybe 2. But if you articulate that you have an unfair advantage in all 5, more than likely it's not really an unfair advantage. So you get people, for example, yeah, we have really senior people that have worked in the industry. Well, lots of people have worked in the industry. That doesn't make it special. But do you have people that have a patent and certain specialist knowledge that only 5 people in the world have? Now you have an unfair advantage. So it needs to be more specific than just having good people in a great market. And then finally, when investors look back at that and to you basically presenting those 3 things, they go through 1, do I like this problem? Is this a problem that's attractive to me to address in the first place? Then you go, is this team and a solution in front of me here? Is it a strong team, a strong solution, an elegant way that I really haven't seen, or is the delivery and execution of it so far so strong that I should back this group to attack the problem and how attractive it is? And then finally, you have these pivotal moments or these kind of tipping points of when investments happen, which is really, what do I need to believe in as an investor that this team can deliver it? So that could be things like they have a good idea and a good insight, but they haven't built the product yet. I need to first see if they can build the product. And if they can do that, then that's really a really good start that probably leads to some success. Or now they have a prototype, but can they sell it? So what's your pipeline look like? Do you have any traction in the market? Have you signed up your first 3 customers? Can they do it? Can they deliver on this great promise that we see in front of us here? And investors are constantly looking for those kind of pivotal moments of what they need to believe to, go along with your proposition and what it is that you're presenting. So that's kind of step 1 of the kind of presentation process, really. Does that make sense so far as the kind of, undoubtedly, if you've done any research, any reading, any podcasts, any things, you would have seen elements or all of this structure before. This is common, but the good news is it's really workable. So in I must have seen, not hundreds of presentations, but definitely, let's say 200 presentations. And they all kind of follow this kind of basic, it's like writing. Every story, if you have a good story that you write, has a beginning, a middle, and an end. It has an arc. And this is the same in a presentation. If you can articulate quickly what the problem is that people have, why it's so important, and not necessarily it's an important problem for the world. There are wars in the world and they're bad. That's actually not that good a problem, because you have to frame the problem in a business context, right? So, it sounds really crass, but it's a way of framing, this is an attractive business problem to solve. Lots of people overspend on X, and we would like to solve that. Or there's a social good, there's too much plastic being used by people. And we've built a solution that we're the only ones that can take all the plastic away at once for $2 for everyone, and there's no more plastic in society. That's a social good, but it's still a financial business problem you're solving underneath that umbrella that you're now sharing your idea of how you want to stand that up, and and how you build your business. Does that make sense?
Yep. Niels, one of the things that I see and get bogged down in a lot is statistics, use of statistics to identify the size of the opportunity and all that sort of stuff. And maybe it's the pessimist in me, but I just wonder how important those things really are. Yeah,
they can be important to some, because they can lead to a perception of competence by, these. So the first thing that most investors would say that they're founder-led investors, right? They focus on the people in front of them as opposed to the idea necessarily, right? Is this a team I want to back? Especially on the angel funding side, when this might be their first idea of a really exceptional group of people. They might fail in this first idea, but their second or third idea might be amazing. So let me fund them a little bit now, because they might pivot twice over the next 2 or 3 years and become an amazing business. But I'm kind of backing that group, really. Yeah. And so when you say statistics and how well you know the area that you're across, that can be a way for you to articulate that you really are someone that you should back because you're really deep in your domain expertise. That being said, I'll show you an example in a minute of a very famous presentation that follows that structure, and you can tell that it actually isn't that good. It doesn't have data, it doesn't have backup statistics, it doesn't have source material that they're referring. It's basically just a couple of bullets on a slide, but it became one of the most successful tech startups in all of the US in history. So sometimes going too deep in the statistics and the background information it's definitely subordinate to having a really exciting solution to a problem, if that makes sense.
Yeah, that does. Yep.
Cool. Any other questions on this particular part, Steve?
Or maybe I'll add to that. It's the statistics work as like a double-edged sword, because I guess we get a lot of pitches as well. I think one of the most overused ones that aren't really scientifically validated is something around how there's a $1 billion gap in the legal tech market.
Yep.
There's nothing to prove it. They have Thomson Reuters sourced as the quote.
Yeah.
And you look at it and you know that they haven't done any homework into it. They haven't really considered it. It's not a real factual thing that they can put up against. So it's always just does this?
Yeah, correct. Yeah, that's what I mean. It's last year there was this much billion spent on investment. Yeah, I agree. Okay, thanks.
Sorry. And then just on that, one more point for Niels. When I was in Boston and they did angel seeding, so they had this thing called the Venture Cafe. They had pitch nights, and they had real multi-million-dollar angel investors there, making investments on the spot. So they talk about the product, they talk about everything, but I couldn't believe how much they actually probed the team and the people that they're working with. and that surprised me because it's really, they took the view of, yeah, the idea is good, the concept may be good, the implementation of it might be good, but like it was more important that they trusted the people that they were investing in was one of the big sells.
Yep. Yep.
Absolutely. Another really good example of that is I forgot what it's called, but this is pre-COVID. There used to be an event that was part of the South by Southwest event in the US, and they used to have some sort of an event called the Startup Bus. So they would have a bus and they would put 40 people on it. They would drive from the Bay Area down to Austin. And over those kind of few days that the bus was driving there, the 40 would divide up in teams of 3, come up with an idea, and then they would pitch halfway the trip to a bunch of investors, get some feedback, drive the rest of the way down there, do the final presentation, and the winner get anointed. And then at the halfway point, they were interviewing one of those venture capital folks on, who do you think is going to win? And it was really interesting because I think what they were saying was it was interesting that about half of the people had the same idea and they were working on basically the same solution. They weren't cheating from each other. They just had independently come up with a solution that was all around what was hot at the time. And then they said that the one winner they already knew was going to be team, say, 4. And the reason it was going to be team 4 was they had the best implementation. They were moving the fastest. They had a really, compelling thing that you could tell was people gravitating towards. So the quality of that team to capture that opportunity and run with it in a way that was really exciting, it was gathering a lot of traction, was the defining factor of why that team was considered to be strong. So you could overcook the problem solution definition without going for the inside part, which is what's special, right? Why are you, as an organization, the best at delivering that solution you've come up with? Because you can guarantee that most solutions, there's another 12 people around the world that are working on something similar that's 70% overlap with what you're doing potentially.
Yeah.
So why you? And why is your solution, but especially your way of getting about it, so special? And that needs to jump off the page when you do the presenting, even if you only get 2 minutes. Right? That should be your focus. Go for the problem, get a nodding head. Go for the solution, get like tell me more. I hadn't thought of it that way, right? That's the reaction you want. And then you go, here's how it would work. Okay, great. And then you go for the insight. And here's why we can do this. And so, boop, 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 those 3 steps, that'll get you a long way because you get a nodding head. You get a, interesting. Oh, wow, that's a really interesting way of tackling it. And then boom, last one. So that's a good way of kind of rolling through that, if that makes sense.
Yep.
Niels, just a quick question.
Yeah, go for it.
In terms of sort of pitching for business versus pitching for investment, other than the sort of ask, of course, what are kind of the main ways those pitches would vary from each other?
And how do you mean vary? Like vary because of the topic of what it is you're asking for, or?
Yeah, I mean, I think, for example, when I've built pitch decks myself and sort of presentations that I give to potential clients, there is a lot of overlap, but I think the main area I'd focus on, for example, with someone when I'm pitching for business is, okay, how would implementation look like? What would a timeline for our partnership look like, etc. I'm just kind of curious whether there are other sort of specific ways that you see those pitches or think those pitches should be different from each other.
Yeah, no, they are definitely different in I think in the primary sense is that when you're pitching for investment, you're pitching the whole of the business, and the traction you have with the business becomes a selling point for someone to invest. And you're talking about where you want to take yourself as a business. Some of that can come through in a sales presentation, but mostly the sales presentation is what's your value proposition to that segment, right? So now you're doing a kind of more of a business model canvas in your head around, okay, who is it that I'm talking to? Why would that person buy my thing? And my solution can be special. And do you have this problem? Yes, here's my solution. Oh, interesting. So you're still following a little bit that same trend. But what becomes really important is where you basically show this is what you're communicating to me as being your problem, the thing that you're talking to me about. Here's my idea of how I would present that to you in the way I would fix it. And here's what I'm asking you to do. So it becomes more, say, B2B or B2C sales. A lot of the stuff around that is also the kind of business that you are. If you're a pure business-to-business salesperson, what you see a lot of startups do now is actually not do the long tail business-to-business sales cycle, but have a business-to-consumer attitude to business-to-business sales.
Yeah.
Meaning you basically create something that anyone in the organization can just log in, whip out their credit card, buy a subscription to what it is you're selling, and it becomes this grassroots upwards motion of people just buying in the organization your compelling thing, so that it, and in the end, becomes the enterprise solution. So there are entire venture funds, say in the US, that only focus on that style of software as a service style business models. And it makes the selling into corporates a lot easier because you productize something that an individual can buy, as opposed to where you have to deal with procurement and, you know, big contracts and dissemination to the organization and hope that it gets adopted. You go the other way around, you know it's adopted because people have already bought it by the time it becomes, you know, pervasive through the organization. So good examples are things like Slack. You know, you start using Slack, at some point everyone in the organization starts using Slack, and it becomes the enterprise solution for texting with each other and sharing information because everyone signed up for it by now. So there's different ways to do that. And so it's not always with a big presentation you pitch for business. Sometimes you just want to come in through the word of mouth, and that's a more compelling way to do it rather than a big poo-ha pitch about how great you're going to be for everyone. Does that make sense?
Yeah.
All right, so
Nick also had a question in the chat.
Oh, sorry. Let's have a look.
So
Oh, that was okay. That was like ages ago. At the very start, when you were talking about people, like you're saying, oh, we've got the best people. Like we're in a position where we've got Indigenous people in tech who are female. Do you think that counts as our superpower? Can we use that?
I think it really does. I think especially if you can relate that to say-do ratio, right? So in the end, people buy what you do, not who you are.
Yeah.
But if because of who you are and your background, what you do is faster, better, you know, cheaper, because ultimately when a business looks at themselves and when a leadership team in a business look at their business, they have a number of things in their head, right? They have their metrics, their values, their culture, what they stand for, their kind of overall objectives as a business, their stakeholders. That's swirling through their head as a leadership team. And then they look at their organization and they think of themselves as, okay, I need to build an organization that can do all those things, that can create the right values around ourselves, the right metrics, the right objectives, the right do's. So if you can say this is what makes us special, it needs to relate to some of those kind of things that leadership team cares about.
Yeah.
And it's ultimately because businesses and potential customers are ultimately focused on things like shareholder value and those things. If it relates to their, overall commercial success, that's even better. But that's the way to think about it. It's not in and of itself a thing you can just state and people buy from you right away. But if you can relate it to the things that they care about, then it becomes more easy for them to make that link and make a yes and believe that it is special. Does that make sense? Or?
Yep, total sense. Thank you.
Okay, go to my little list here. Okay, so this next page, can everybody see this again?
Yep.
Great.
Yep.
So and again, you can just replay and freeze this here when you get the recording, or just I can send the slides around. That's another way to do it. This is going to be a bit of a checklist of how you can construct, a good presentation. There's a section 1, section 2, 3, and 4. Section 1 sometimes has this section 1A where you have the ask up front. Some people explicitly tell you to put what it is that you're after up front. Hi, we are Awfully and we're looking for an investment of $100,000 to build our pilot, right? Some people really like that upfront sentence so they know what it is that you're looking for. Recently, I actually haven't seen this. In early stages, like you think about like 2008 to 2012, it was never there. So it's gone through this cycle of where it was almost obligatory to put it up there. Nowadays, I think it's more a little bit optional around whether you put that up front or not. Just maybe feel out what feedback you get, whether you should put that up front or not. Sometimes it feels a bit mercenary to immediately start talking about what you want people to do. That being said, some investors really like that. So you can ask that when you get a presentation a little bit as well, if that's something they need to see in the front, or they want to see it in the course of kind of the conversation. What is always there is section 1B, which is a problem and solution. So this is what we just talked about. So have a page there that describes the hypothesis, share why this is so compelling, describe the solution you found and how you're creating it. Then you shift into insight. So how does the solution actually work? Why is it an unfair advantage? Why is now the time to build the solution and start building this business and product? Then a little bit of the size of the market, like we talked about a little bit before as well. That's helpful to see how many people have this problem basically and could have this problem. And then the question you'll likely get is, why is no one else doing this? So describe why other people, incumbents, other tech companies are somehow blocked or have a disadvantage of coming into this space. That gives a good sense why you have a special thing. And again, here you can talk about people's backgrounds, cultures, all that stuff as well. Show that you understand the technical part of the solution to create a bit of background. Then section 3 is your plan. So now you make it real. You say, our first steps have been to do the following. Here's what we've achieved so far. And it can be anything from we opened a bank account to we signed up 3 customers to, we've moved from just Australia to now be in 4 markets. It's all about the point of, traction that you've managed to achieve so far. And then the next bullet is, okay, where does that take you next? What are you focused on? Just like we did for the wishlist sessions, what's on your immediate plate from a growth perspective? Then you go into share a plan of what you focused on, kind of really low lens, really quite immediately. And then that ladders up to your ultimate kind of end goal. And then 4 is, if it's an investor pitch, typically, share what you will use the money for. So if you invest in us, then this is the next steps of what we would do with the funds that will become available to us, and then describe next steps. So that's a basic blueprint of a, 6 to 12 page pack that you could basically paint by numbers. You could put the headers at the top of the slides and basically start writing, just maybe print them out or use a stylus or something, and just start sketching out what your story is and whether you kind of think it's compelling with what it is you're describing to yourself. Another way to do this is a dot to dot. So you basically create a Word file and you basically dot for dots tell the story through these kind of different sections in how you would tell the story about why your solution is, as exciting as you think it is, with what you're describing to others. So there's many ways to do this. This is a way of laying it out. It follows the blueprint of a lot of presentations that I've seen that have been successful at raising money. So this is a kind of suggestion of how you could approach creating your presentation deck for investors by just walking through each of those dots. Does that make sense?
Yes, thank you. Niels, I have a question. Sorry. When we're founders, we obviously fall in love with our ideas and we put our entire lives on the line to bring it to life. But sometimes when you hear other founders stuff, you're like, really? How do you sense check yourself on your own passion for your thing? I remember a lady that was pitching augmented reality for cat clothing, and I was like, who needs that? But she was so passionate and just loved it. How do you know that you're not in the crazy bucket as well?
That's right. Well, I think it starts with that whole old kind of cliche where, people describing, being an entrepreneur as having an idea that no one else believes in but you, and then working so hard at it, it becomes a success, right? So it's a little bit like that you have this idea that you can't unthink and you can't not work on it, then work on it, right? But I think the flip here is there's a couple of lenses. So the first lens is sometimes you just want to work on something and you really don't care about the commercials. And that's more like a hobby, right? It's something you just love to do, and that's great. You should work on that, and if that's your passion, then you drive your passion. Then there are things that what people would call something like lifestyle businesses, where let's say you have a solutions. Some people pay $2,000 a month for it. You get 50 people to sign up. That's a pretty good income, right? And you can lead a really great life, and you kind of stop there because you go, that's enough for me. Lots of lovely people have my product. They enjoy having it in their hands. I enjoy giving it to them. And I'm just going to go and stop there. It becomes a lifestyle thing. It becomes something I enjoy doing, but I'm not pushing for more. And then there's the third group, which is the startup tech entrepreneur thing, which is, the whole cliche, what's cool, it's not $1 million, it's $1 billion. That's what's cool. So it's more about, I want this to be in the hands of everyone. And it's not the money, right? It's not, I want to be rich on this. It is, I'm not going to stop until 2 billion people have this great thing that I love to produce and give to them. So there's kind of these 3 stages, and every person that works on a project kind of needs to assess who they are, right? If you think this is a great hobby, but you're really not up for drumming up the $10 million investment for something that has good unit pricing so investors come in and help you propel this around the world, then don't go that route, right? Because you're gonna be miserable. If you are more interested in doing something on a lifestyle basis, that will inform how you present your business to the world around you, right? So I think being honest about your ambitions and where you want to take things is one thing. But then the flip side is sometimes people box themselves into a, say, lifestyle style thing, when with a bit of coaching and a bit of push, they would be delighted to have the ambition to, move this from, in your case, Mick, from, First Nations in Australia to First Nations all around the world, right? Because they're facing similar things that your solution could help them with. And for that, the lens needs to shift. There's different budgets required, different sizes of teams, which means it informs the way you present your business to people who can help you on that journey and can help you with the funds you need to build what it is you need to sell it to so many people.
Yeah.
So that's kind of one way of kind of thinking about it, is kind of where in those kind of series do you find yourself?
Sorry, I missed the last sort of minute of that, Niels. I had a kid yelling at me. How important is it to understand what bucket you fit in order to pitch the right way? So is there a certain way that you can sort of see this that's going to eliminate investors? Like, investors are looking for, investors should clearly know, they're in this for $1, they're going to get $3 out. Like, it's a pretty clear thing. And if you come in there and say, look, I just want to sort of, buy a yacht and travel around and not really care and all that sort of shit, right? It's not going to attract the investors. So how much lying do you have to do in order to sort of, you know what I mean? Like, yeah.
Don't. My recommendation would be don't lie.
Well, no, I know, but like,
and I know you know that, but it's investors are interested in the third one of those, right? They want ultimately they want to help people on the journey. They have a value set, but they get their money from other people who invested in their funds, and their job is to get a appropriate return for the money entrusted on them. And the amount of potential return you can get from the third group that sells their product all around the world and becomes a household name is vastly bigger than a lifestyle product or something else. That's not what a venture capitalist. That doesn't mean you can't get investment. There's other ways to get investment from people. There's other ways for people to get engaged, but I think it's much harder for the other two to get venture capital investment for something that you already know yourself isn't going to clip over, say, $1 million of sales in perpetuity, right? It needs to be able to do this. So that is a reality, and I think that doesn't mean, like, when you build a SaaS product, you don't really need that much kind of investment. You can get people to sign up for your subscriptions. You can bootstrap that thing pretty well because people buy it, they pay you the $2,000 per month, They sign up with a credit card and off you go, right? We've seen in the Law Tech app lots of people, even participants, who have gone, look, I have 3 really great customers. They keep the lights on. We love them. We work with them. Love to get one more, but I'm not looking for investment from external people at the moment because that's the kind of company I want, which is fine.
Yep.
Any other questions?
Maybe I'll add, this is not from my experience, but this is just from working with a few investors. It comes a little bit back to that point I made earlier about the team, but also kind of like who you're surrounded with, who's your like advisory board, to make sure that they know you're not going to turn this into a cat product that, that's semi way off base. So your advisory board speaks loads about who you are, what they have, and then what they understand of the market.
I'd
sense
love
check
to pick.
yourself.
Yeah, I mean, you just touched on something that's actually been so front of mind for me at the moment, that advisory board piece. And that might be a bridge too far for today's conversation, but I'd love to talk about the strategy of bringing an advisory board together, when to do it, how to do it, what non-executive directors expect for their position in the business, how you understand how much to give away at the point in which you can't understand what your valuation of your product is, right? Like it's very arbitrary at the early stages. Because I'm going through it right now. I've had a couple of people reach out and say, we'd love to sort of sit on the board, and I'm like, well, I have no idea how to do this, or if I should do this, So another session.
Yeah, definitely, and not to catch up on that. I think again, it's like 3 levels. One is mentors, then there's advisory board, and then there's your fiduciary board. And it goes in that order. It's easy to get a bunch of people to sign up as mentors because they're great. Right? Would you like to be a mentor for me because you know so much and I'd love to pick your brain about the stuff that I'm curious about? Ask them. Just be explicit, and love to kind of, have a regular session with you to pick your brain if you're up for that and if you kind of believe in what it is that we're doing, that would be fantastic. It's like tier 1. Tier 2 is if you have a few of them, you could make a decision to say, I'd love to bring these mentors together and just as a wider group, just bounce ideas off them. They will not have a role in my company. I might give them a % of my business as a reward for being on the advisory board, and that way I can put their faces on my slides when I'm presenting. I can bring them in X number of times a year in a more kind of semi-formal way, but they have no fiduciary responsibilities. They have no say over how my business is run. They are silent partners that have a view and an opinion that value because they've been mentors to me before, and that's it, right? And then the last one is the fiduciary board, and that's the one you want to be super careful with, because if you do get investment, people will want to be on the board. And then what happens to votes? So if you already have 4 people sitting at that table and now other people start to come in, what happens to your ability to steer the company in the way that you want, right? So that last one is almost like a last resort. You don't have to put people on the board if you don't want to, or if you don't think they're valuable for the running of the business itself. People tend to be, in my experience, perfectly happy to go on the advisory board, not have the director's duties and all that stuff that comes with being on the board, but still being attached to your project, loving what you do. They would like to weigh in, and they have a mechanism being rewarded because you've given them a percentage of a business that currently isn't valued much. So you give them a little bit of skin in the game and interest in your success. So that's the way to do it.
Yeah, that's the space I'm sort of looking at the moment, that advisory board piece.
Yeah.
And you're right. That does make a difference when you're sort of going through this pitch process. Who is it that's advising us? Do they have domain industry experience? Do they have proven track records of building and exiting or whatever it is before? Do you have the right people surrounding you? It does definitely help us.
Definitely. And even in corporate life, so I spent most of the beginning of my career in kind of corporate environment. We would always recommend people to have mentors and basically to see them as your own personal board of directors. So basically, have a set of 4 or 5 key mentors you trust and who will tell you, the truth and, give you straight if they have a certain view. That's an incredible panel to have behind you, no matter what kind of career you choose to have, whether it's corporate or startup.
Yeah, absolutely. I agree.
Thank you. So let's keep going. All right. Everyone back on the slides?
Yep.
Right. So the next one is, I'll roll through an example, a very basic one, but quite a successful one, and just to show back how you see that blueprint kind of come to life, right? The example is Uber in 2008. So these slides here in the middle are basically Uber's first presentation, startup presentation, when they first had their idea, and you can tell because there's a big fat BlackBerry here and a very old iPhone, like the first one, and they called themselves Uber Cab at the time. So I'll go through things quick, but again, in the recording, just pause to read the bullets and things if we go through too quickly, just in the interest of time. Also happy to share it around. So number one, the problem. Cabs are inefficient because of all these reasons. Also, there's a medallion system. It creates monopolies, which are bad because they're expensive and drivers get underpaid and there's no incentive accountability for drivers. And then you pivot at the end of a problem and you say, if we would have a digital hailing system, you don't need to be in this closed system anymore because you can do it yourself. So that's kind of what you would call a bridge to the solution. So you have problem statement, more problem, bridge. And then you go into the solution where you describe the kind of, the experiment you're running, the hypothesis of a solution. What if there was a Uber cab concept that does the following? And then there's this device that people use a lot, which is describe something else people know, and then link it to your own area. So in their case, people knew what NetJets was back then, which was fractional ownership of private jets. And they said the NetJets of car services, just to make it easier for people to get what you're going at. Then you go to the reveal. So go back up. If this is the problem, here's another problem. This is my concept. Here's how I would kind of put it in motion. I would have a, member-only one-click car service that wasn't hailing from the street and has a guaranteed pickup that uses a mobile app that matches clients and drivers. And they can see photos of each other to create trust. Then you go into Insight. So these are all individual pages. This is not one slide. So this was slide 3, 4, 5, 6. These are the differentiators of our solution. These would be the operating principles. These are the apps we would run. And this is the website that we would create, where you have a number of features. Then you go, it's interesting for anyone going to restaurants, local transport, airport drop-offs, commuting, dropping the kids off, and elderly transport. Here's the benefits for users. This is back to values, why this would be good for the environment. We're going to be using hybrids and other things to have fewer, fuel consumptions and everything else. And this is the kind of fleet we would use. We would use really good cars, because back then, and this is another lesson in these presentations, you don't have to be correct, right? This stuff can change as you go. So in 2008, their view was we're going to buy our own cars, and then we're going to have drivers in them and drive around, and people can call them up, and we would show up with our Uber cars, and they would basically do it. They were not talking about ride shares and people using their own personal cars to drive people around in a pool yet. That came later. Here's the market. So this is your question earlier around how much of stats do you do? These are kind of nothing stats. This is the overall one slide on the size of the market. This is roughly one pie chart with how it's being kind of built. This is the use of the smartphones. Again, as a presentation, it doesn't actually share a whole bunch for this particular solution, right? And this is Uber. So, and then you go into, this should actually be 3 because this is the next section, this is the plan. So this is a lesson on what your scope should be. Start small, right? So they say Uber Cab will only be in central San Francisco as a start. And then if that's successful in our pilot, we'll let you know, dear investors, then we'll move to Manhattan, which is the biggest kind of taxi area in the country. So we'll go right to the place where we think we can get the most growth, but only after we've put it in place in the place where we currently are, which is San Francisco. We'll use the following technology and the applications that we're going to use, give you a bit of sense of, we know what we're doing. Then if these 2 are successful, then this is our rough expansion plan of what it looks like over time, the key cities and why. And then this is the potential outcomes. If we are successful, then we will have this much revenue, this much profit, will be in these many cities, and if things don't go so well, then we'll stay at 10 cars, we'll be a time saver for San Francisco-based executives. So even if you invest in us and we're not that successful, you don't lose your shirt. We're still going to be around to do something really interesting. It'll just be smaller, but that's the worst case scenario. That's the floor. And then you talk about the plan, which is, this is what we can do in the future. These are our marketing ideas of how we can grow. These are actual, location-based services we can add, which was new back then. And then you look at the progress to date. So this is Uber. So this is now in so many countries. The progress to date in 2008 was, we've reserved a website. We've filed for a trademark. We've applied for a license. We've opened a bank account. And we've recruited some advisors and 15 potential clients. I think the word potential is missing here because I don't think they're allowed at that stage yet. And then we filed a provisional patent on the ride-hailing technology that we were building. And our next step, if we raise the money, would be to buy a couple of cars, develop the app, and do a demo, by February 1st. So this whole thing flows through this framework almost like for like, but as you can see, they're not particularly pretty slides. They're not particularly, highly compelling numbers. There's no deep market insight here. And that doesn't mean to say don't do those things, but what's much more important is this problem solution and why it's special to get people excited about, wow, this could really change that sector. I feel the pain when I go through taxis. I get this. And if this works, how big is the taxi industry? You start thinking as an investor just how big this can become, right? And so what you're saying and your solution and why you're special in what you've done is so much more important than having slick slides and great stats and market information and all that stuff. Because if that initial pop off, wow, this could be huge, isn't there, no quality slides can solve for that, right? So then ultimately, in their case, they were clearly looking for, to be everywhere in the world. Within 4 years of that presentation that I just showed you, they had raised more than $400 million to build their business in, I think, 3 or 4 rounds, so consecutively. That being said, they had showed this presentation for probably 1.5 to 2 years of those 4 years before anybody put money in. So they had to do it with a $200,000, I think, loan from themselves to the company to go through those first 2 years. So even something that was moving as fast as this still had to, tell tons of people for, 2 full years about what they were planning to do before people actually help them scale this thing to the size that Uber is right now. So it gives you an indication for, how others have done this in the past, how these things are laid out, what the structure is like, what the objectives are, what you're focusing on in your story, and then what you want to get from, your audience ultimately. Is it, to join a journey, to do an investment in your company, to take your idea forward, to do marketing, to sell to businesses. All that stuff follows a rough framework like this. And it all is about, I have a problem. Oh yeah, let's be about that problem. Here's my solution idea. Huh, that's an interesting way of looking at it. Here's how we would do it. Wow, that's amazing. I can't believe it does that. To here's how we're going to implement it and why we're special. They go, oh, okay, these guys are moving. And that idea I've never heard of, that's amazing. So tell me more. And what help do you need from me to get it done? You can get that flow, you get that to stick. You're a long way down getting people to, go along with you on the journey and investing in your company.
Niels, one of the things that I've never noticed because I thought I'd looked at the Uber deck and I looked at a couple of other ones as well, is the worst case scenario element of their pitch. Is that normal? It's
a good question. To be honest, me neither. I actually, because investors are so looking at the high flying thing, I haven't seen a lot of presentations having the fallback. You know,
Yeah.
if everything goes bad, we will have a tiny company. It's kind of, well, you might as well just stop and do the next thing that could be big.
Yeah.
But
Yeah.
100%.
Yeah.
I think it's an interesting way for them to put that. I don't know if they kept that in the deck, but it's a really good observation.
Okay.
Yep.
Yeah, I
But
feel
it's
like
definitely not a recommendation you do that.
No.
I feel like I've never seen that before, but for some reason, just reading it, I felt like a bit more comfortable. I was like,
Yeah.
It's odd, but yeah.
That's right. I think also it's who you're presenting to, right? So back then, if you look on a thing like Crunchbase and you look at the money they raised over time, the first people they were presenting to for the first 2 years were people that were putting in maybe $50,000 or $100,000.
Yeah.
They might have been okay with you saying, "Give me your $100,000," because you might be the owner of a very lovely small company in San Francisco, and you're not a fund. You're not losing your shirt. This is, people that want to be with you on the journey. But then you might drop it by the time you get to the bigger funds for your Series A round when you're asking for, I don't know, 5, 6, 7, 8 million, because at that point they're not interested if you become a lovely company in San Francisco. They want you to be big, right? Yeah. So that'll be the focus.
Yep.
Cool.
Awesome. That was really good. Thank you.
Yeah, very appreciative.
Actually, there was another point that I have to jump off. I got carpet to rip up before it gets dark. But the question that I had was actually around finances, and because you mentioned something around a loan to the company or a debt to the company, their own money. So how you structure that? Like, I'm sure I could go and read it and learn this stuff. And it's probably not that complex, but I wouldn't mind understanding how you officially do that, so you can retire debt if you're later on down the track raising cap.
Yeah. I think that's really good for some of the mentors that we have on the program from an accounting and stock perspective that have that really down pat, because they can kind of probably come with you or at your stage here and ask some questions, and takes a little bit more time, but then here are your options, and these are the pros and cons of it all.
Yeah, very cool. Yeah.
This is very hard to do a high level answer on, because
it is. Yeah, there's a lot of. I agree. Okay, no, thank you. Mate, guys, thank you so much. Sorry,
Stu, two things before you go. Just on your behalf, I reached out to someone that's non-executive director, see if he can give you some advice on your board.
Thank you.
And then 2 is Sarah. I think you want to just catch everyone before everyone leaves.
Very briefly, we've cancelled the drop-in sessions, and I'm looking to set up it'll be a 30-minute fortnightly catch-up for each of you with your sponsor and Stephen and Michelle and whoever else from around the firm. I was aiming to kick it off next Thursday, so in digital next Thursday at 4, if that works.
Let me just quickly check that.
Build my wheel at 4:30, and then Stu, you at Stu will be the following week on the 9th, and you can choose your time, but I was thinking around 4.
4 is good. Lock it in.
Yep. So that works for you, Mickey?
Yeah, that works for me.
Yeah. Great.
I'm happy. Should I make a Teams, or will you do that, Sarah?
I'll do it, and I'm hoping we might have to just check in with the first lot on how the internal sponsors are placed. It's a bit of a scheduling nightmare, but we'll get there.
Could I just ask if Chelsea and Joe could come in that too, please?
Absolutely. Yeah.
Thank you.
Thanks, everyone, and thanks so much, Niels. That was a great session. I hope everyone found it useful, and
thank you very much. It was awesome. Thanks, guys. Really appreciate it.
Thanks.
Thank you.
Thanks all.
You guys, Niels.
Have a good afternoon.
Bye.
Bye.